Most people would have liked a larger offering. But I think as far as we are concerned, this was really about Biocon monetizing its investments in Syngene to address some of its cash requirements, funding requirements for capex expansion, and of course for supporting some of our very advanced research programs, especially in the biosimilar space. And if you actually add the private equity investment component and the ESOP, it all sort of basically comes to about 25% overall.
32%, is that sustainable? And could you also throw more light on the growth prospects and which would be the drivers essentially going forward?
So on margins, we've sustained 32% as an average over the last 5 years, so we think it's sustainable in that sense and positions us very well competitively. In terms of growth, we see growth in multiple dimensions. So we see growth coming from our existing customers, growth coming from new customers that we're acquiring, growth coming from capacity expansions related to manufacturing, related to chemistry, biology, formulation, stability, and so forth. And we see substantial growth coming from the extension of our model moving into commercial manufacturing, where we're very strongly placed in supplying a number of our partners today with clinical trial materials, and we very much hope to be supplying them with commercial material in the near future.
Do you think that Biocon will be re-rated, and on the basis of what, once Syngene is a listed entity?
Well, I firmly believe that Biocon should be re-rated, because if you look at the kind of valuation that we are ascribing to Syngene, I think you will see that Biocon is highly undervalued. And I think from that point alone, I hope that, there will be a re-rating of Biocon share value, the stock value.
And what about further monetization? Are they going to really depend on more Biocon's requirement for further expansion? And in how many years do we see the next one coming in?
I think Biocon will have to basically address this question as and when we see the need for greater investment, either in capacity expansion or in addressing some of our R&D needs. It could take 3 to 4 years before we basically see the next phase of monetization of our investment in Syngene.
How are you going to raise funds for that? Would there be monetization for that? And when shareholders look at your company, what are they really betting on for future?
So in terms of expansion, we have expansion plans continuing on an ongoing basis across many of our capability platforms. So we're looking at expanding capacities in formulation, in biologics manufacturing, in chemistry laboratories, in biology laboratories, so across multiple fronts. As we model it, we will have to go into debt at some point, but when we look at that, even at maximum case, we very, very comfortable, and the debt-to-equity ratio will be less than 0.5. So we think that we're well placed to fund our growth going forward.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.